Hey everybody, it's Ken here. I'm with Danille.
Hello.
So we're excited about our guest today, Russ Gray. He is co-host of the Real Estate Guys. Welcome, Russ.
Well, thanks for having me. Yep.
Let's jump right in on inflation.
Well, people ask all the time, are we going to have inflation or are we going to have deflation? And I say, yes, I think we're going to have both. And I think we can have them both at the same time. And people have a hard time getting their mind around that because they only know how to think of numbers in terms of the dollar. And yet, if you look at things like real interest rates versus nominal rates, or you look at real wages versus nominal wages, and, not to get wonky or anything, but basically nominal is just a number. So it's a number. You and I are old enough to remember where if you made $50,000 or $100,000 a year, you were upper middle class. That was a good income. Well, it's not that way anymore. I read an article the other day that, lower middle class, just to scrape by in San Francisco, is $300,000 a year. Well, it's not that the lifestyle got so much better or the work became so much more valuable. It's that the dollar that you're paying for it all went down. So in terms of your lifestyle, in terms of your purchasing power, you deflated. You lost the ability to purchase. And yet in terms of the nominal, the amount of dollars actually coming in, flowing through your hands, the numbers went up. And you see that with your tenants. Your tenants might be paying more rent and earning more wages, but they're getting smaller places and they're having to pay more for their cost of living. They're struggling. I mean, it's really, you probably know a lot more about it than me, just managing your portfolio of tenants. But gas and food and healthcare, everything has gone up. College tuition, when you get to that stage in life, raising children, I mean, just everything costs more. And even though your wages are up, your cost of living is up more.
Then, all of us Americans, I mean, we see it every time we fill up our gas tank, every time we go to the grocery store, every time we do anything. I mean, everything's just going up.
Well, the thing is, it's been going on for a long time. And I talked about this at our last investor summit. When I don't think you were there, Kenny, you hadn't arrived yet, but I dressed up as Graybeard the pirate. And I did my whole presentation in full pirate garb. And it was the kickoff presentation for the summit. I really wanted people to kind of understand what was going on, how the financial system evolved from where gold and silver were money and the paper were claims on that money. In other words, you could turn the coupon in, the dollar, the paper currency in to get the metal, and metal was money. Somewhere along the line, the system changed and the currency became the money. In other words, the unit of measure. A dollar was a specific amount of silver. And then all of a sudden, a dollar went to being its own asset all by itself, not really indexed to anything. So the unit of measure became the money. And I kind of went through that whole evolution to help people understand that the system itself is flawed. And that's the core problem. We borrow our money into existence. I think we were all together many years ago when Robert Kiyosaki did an event talking about gold, had Mike Maloney out. And Mike was explaining how we borrow our money into existence. And so because we do that, we have to repay all of the principal plus the interest, but there is no currency to pay the interest. So you have to go borrow more money. It's a cycle of perpetual debt. So it doesn't matter what the politicians say, doesn't matter about the debt ceiling. They just raise it and they really want to just eliminate it. If they were to pay off the debt, they would eliminate all of the money and the system would collapse. It's the dirty little secret nobody wants to talk about.
Can you explain that? If they pay off all the debt, the currency would collapse.
Yeah. So imagine if we were going to sit down and play the game of cash flow or Monopoly. And you start out and the banker gives everybody a certain amount of money to start the game, and then it circulates. And so imagine if the three of us were playing a game and each of us had $1 million. And so there's $3 million in circulation. And let's say the interest rate, let's say if we just started that and we just issued the money, then the money would have no interest attached to it unless we lent amongst each other. But what if in the game, the banker lent you the money? In other words, the money didn't exist until it got borrowed. It gets borrowed into existence. So let's say the interest rate is 10%, just to keep the math easy. At the end of a year, you need $3 million of principal to pay off the debt plus $300,000 of interest. But how much money did we create? Only $3 million. So the only way to get the interest, the $300,000, is to borrow it into existence so we can pay the interest. And now we owe interest on the interest that we borrowed, and it compounds. And that's why the debt just continues to compound, has ever since they founded the Federal Reserve and created this system in 1913. And I think if you really look at what's going on, we're at the end game. Interest rates got reset in the 80s all the way up to over 20%. And we're going systematically down. I mean, it was jagged, it would go up and down, but basically downward trend all the way till it hit the zero bound coming out of the great financial crisis. Well, once interest rates hit to zero, where do you go from there? And if you want to kind of talk about where interest rate policy is, why Peter Schiff, our mutual friend Peter Schiff, says the Fed is in a monetary roach motel, can't get out of it, we can go there. But fundamentally, the system is flawed, because if you were to pay off the debt, you would eliminate all of the money, because all of it is debt. If you look at the dollars in your wallet, they say Federal Reserve note. A note is a debt. The other thing you have to understand is that as an entrepreneur, I mean, I know you know this, you get up every day and you think about how to make strategic investments, technology, training, so that you operate more efficiently and you reduce your costs to do. You negotiate better contracts, you create alliances, purchasing alliances, whatever you can do to drive costs down. And then you take that extra profit and you spread it out to your employees. I know MC Companies is one of the best places in Arizona to work, and you take care of your people. You also continue to make those strategic investments in better systems, better processes, and greater efficiency. You lower your prices to your customers to attract more market share. All of those things go on. Those are productivity gains. And when you have a Federal Reserve whose policy is to maintain prices up and create inflation, they're going to print as much money as it takes to suck up all of those productivity gains and then make the price actually go up. And so you say, well, I don't see the prices going up. And so people think this inflation that we're experiencing now that we see the prices going up is a new phenomenon. But this has actually been going on for quite a while. It's just that we've been stealing the productivity gains, and now we've eaten all those up. And now the actual inflation is coming out above the surface where people can actually see and feel it. And they've got a big problem because people are upset about it.
So can you break it down for me So we understand what inflation and deflation is, but what is stagflation? Because that's where I start to get confused.
Yeah, that's perfect. So stagflation is where you have nominal growth, where the numbers get bigger, but the actual productivity goes down. And the way I explain it is, if you had, say, an economy that was producing, or a business that was producing 1 million widgets at $100 a widget, then you'd have $100 million company. And let's say you needed 10,000 employees to do that. And that means each employee creates 100 widgets, a year, or whatever the number is, whatever their productivity is. But now, because of inflation, you actually have to sell those widgets at $108 or $120. I'm sorry, $120. So now you'd say, well, if I sold $1 million widgets at $120 million company, but I lose some market share when I raise the price. Some people can't afford the 120. So now I'm only selling 900. Well, if you do the math, and this is coming right out of the presentation I did on the summit, if you do the math, the 900 times 120 is 108 million. So in other words, your company has grown nominally by 8% because of 20% inflation. Your price went up from $100 a widget to 120. You sold 10% less widgets. But when you do the math, your sales in terms of numbers, nominal dollars, went up 8%. So you look like you grew. But based on the same level of productivity, you need 10% less people. So you lay off 100 or 1,000 people. Now you only need 9,000 employees instead of 10,000. And instead of selling 1 million widgets, you're only selling 900,000 widgets. So what the world got in the real world, what the real world got was less jobs and less products, and yet it looks like the business grew. That's stagflation. When the numbers go up, but the supply goes down and the economic activity goes down, and that's how inflation distorts what's going on. It's very hard as an investor. It's very hard as a business person to know what to do in that kind of an environment.
Russ, I know you guys have a ton of stuff on your website, and you guys have incredible podcasts and YouTube and all that. Where can people reach you guys to dig more in on some of these topics?
Well, I think that the easiest thing to do is just visit the website, realestateguysradio.com, over my back shoulder, realestateguysradio.com.
Russ, Thanks again, buddy. I appreciate. I wrote down a bunch of notes here of myself of things I need to follow up on. And as always, you're a great resource for the channel, and I appreciate you.
I appreciate being on, and keep up the good work. I know you're making a difference out there, and the world needs more good ideas and smart voices. So appreciate the opportunity.
My pleasure. Okay, buddy. We'll talk to you soon.
Take care.
See you.